What's good, guys? I'm Kendrick. Welcome back to the channel. In this breakdown, I'll walk you through the players I've been tracking, the ones that played out clean and the ones that didn't. I'll be breaking it all down using my top-down analysis approach, analyzing from higher time frames to lower time frames, finding solid setups. If you value clean breakdowns and real structure, you're in the right place. Let's go to the charts. Hi everyone, so it is me again in front of the chat. So as always, um, we'll go into today's breakdown. As always, we'll start from the higher time frames to build our bias and then move to the lower time frame to find entry levels. Um, so I'll walk you through what I'm seeing, the key price zones I'm watching, and the trade setups that align with my plan. And remember, I want you guys to remember that this is about reading the market with structure and managing risks, not chasing every move that's out there. So stay tight, you know, and prepare for what I'm about to show you guys. So actually today, in front of me is the charts, and I'll be starting with Euro JPY. Most of you guys, for those of you that watched my previous episode, Euro JPY was around, I think, 172.63. We were around there, so I was anticipating a pullback, and then we can buy to the upside. And actually, it pulled back, and I said I won't do anything until we see a consolidated pullback, because the market is not linear. The market doesn't just break out like this and pull back, then move up. No, the market doesn't do that. So markets will. This is how my setups always form. The market will do something like this: to break out, then pull back this way. A consolidated pullback. It's not just a breakout and a pullback. The market doesn't work like that. So when the market was here, I was anticipating a pullback. You can verify this from my previous episode. And yeah, guys, this is episode 3. Yeah. So I said that I'll be waiting for a pullback into Fibonacci and support, and then I'll draw my CTL and wait for the candle break, and then we buy. Everything happened we planned, but just a tiny bit was not as planned. So we did everything as planned. Price pulled back. It gave me a consolidated pullback. I even tweeted it on my Twitter that yes, we have done as planned. Everything has gone as planned. And so the problem is we pulled back. We did everything we're supposed to do. My entry would have been actually around here. Could have been my entry. Around here could have been my entry, and my take profit would be here. Stop loss below structure. And this is a 1 to 3 risk to reward ratio, so it's massive, it's huge, it's wonderful, it's amazing. You get. So this was my actual setup. This was what I was looking out for. So in my tweet, I actually said that I will not be entering this market because of some criteria that did not meet. And let me walk you through those criteria. So let's say everything went as planned, price put back, we broke here. Let's say we entered the market. Let me show you something that I was avoiding. So let's say we entered the market here. High position here. Enter here, take profit here. Stop loss. Are you guys seeing what I'm saying? Like, just tell me genuinely, is this worth it? Doesn't make sense. The setup does not make sense. Listen, as a forex trader I am, it doesn't matter how neat the setup is. If it doesn't give me a risk to reward of at least 1:2, I'm not taking it. You can see that this setup does not make any sense. Look at, we're just making what we risk. You should go for a trade. I go for a trade that has at least a 1:2 risk to reward ratio. A 1:2 risk to reward ratio. But this trade did not give me that. And what did I do? Simply did not take it. I didn't care. I did not care. I did not take it. If price broke out at this region, if price broke out at this region, I would have been more comfortable entering the trade. because my stop loss would have been, instead of my stop loss being this wide, my stop loss would have been here. You get, and then take profit here. Now you want to look to the world. It's now reasonable for me to get into the trade. But like I said, this trade was not, was, I don't know, it doesn't make any sense to me because I should personally risk and get times 2 of what I risk on any trade. So this is not even giving it to me. So I simply left it alone. I didn't want to care if the setup was the most perfect setup. I didn't want to care. So I left it alone. So Euro JPY, I did not take it. That was why I did not take the trade. So for those of you guys that watch my previous episode, you see where I called the trade that you should wait for a consolidated pullback. Don't just go and buy off of this pinch because the market was around there, I think. And then it pulled back. I know some of you attempted to buy, but that was not an ideal setup. Would have waited, you could have, waited for a consolidated pullback before buying the upside. So now that I have left Euro JPY alone, I did not take it. What is my plan for the trade? So Euro JPY is still tradable. Yes, the pair is still tradable. This setup is still tradable. Now I'm going to tell you how I can still enter into the market, even though it has broken this counter trend line. I will tell you how I can still enter. Now this is what would happen for me to be interested on Euro JPY. I would want something like this to happen. Are you seeing this? I would want something like this to happen. A breakout, we've done that already. Retest of this outer counter trend line. So we've broken out of the trend line. I want a retest of the outer parts, then we can blow up to the upside. You get, we've broken out. I will be waiting for a retest here, and then we can buy all the way to the upside. But if we do not retest this CTL, I would not be doing anything. I would leave Euro JPY alone and focus on other pairs that are giving me clear setups. So a retest of this counter trend line is what I'll be waiting for. Because when the price tests this counter trend line, number one, it does 2 things. Number one, it gives us a good area to enter the market, and number two, we now have a nice risk to reward. Let me show you. My barrier, my stop loss, just a little bit, 92 pips. Then my take profit would be crazy, which would give me a even more crazier risk to reward. Look at this, 1 to 3, almost 1 to 4 risk to reward ratio. Now you guys are getting the point. So not because you see any, for me personally, I will not, even though the setup is clean and smooth, but if one thing is missing in my criteria, I will simply not enter the trade. So Euro JPY, this is what is forming at the moment. I will wait for a bounce off of here. If you can bounce off of this CTL, the outer parts, if you can retest, not bounce. If we can retest the outer parts of the CTL, then I will be buying this pair to the upside. And mind you, for you to buy this pair to the upside, please wait for a 4-hour candle bounce off of here. I have to emphasize this. Do not just go and press buy here. Wait for a 4-hour candle bounce, a 4-hour candle bounce, a 4-hour candle bounce. So I'll use this for example. A 4-hour candle bounce. Then you can feel free to press your buy. Put your take profits here at 173.914 and your stop loss below swing lows. So this is Euro JPY in a nutshell. This is what I'm looking at for. I was not even bothered. So another reason why I actually think that Euro JPY will pull back and test this outer part of this CTL is, if you can check, if I can actually remove this drawing, you can see that we have a left head, and you guys know chart patterns. This is probably going to form a right shoulder for us to continue to the upside. You can see a left head and then a right shoulder, and then boom, the upside. See left head and right. So if you can simply do that, would feel free to enter Euro JPY to the upside. But for now, I'm not doing anything on the pair. So that's that for Euro JPY. Another pair that we spoke about during the last episode was GBP USD. GBP USD is actually, going as planned. Everything is going smoothly as we planned, but I actually have one problem. If you can break out of here, I will not be buying. This is the same thing as Euro JPY. The same situation, the same problem. Because think about it. Imagine you bought here. Imagine you bought here. Imagine you bought here. And your stop loss has to go all the way down here. It's not worth it. That's how ridiculously wide your stop loss is. I don't know. This is 280, bro. And then I take profits. That's the same thing I'm saying. The risk to the world is not worth it. Any setup I see and the risk to the world is not worth it. Even if it checks all my criteria for entry, and I simply put in these two and the risk to the world is not worth it, I simply leave it alone. But if it eventually then gives me a nice area to enter, I will then enter the market. So GBP USD, I want to tell you guys that by next week, and you open your GBP USD charts and you see that we have broken out of this counter trend line, please, I would advise that, in fact, I personally will not be buying GBP USD. I will not be buying GBP USD because the risk to the world is not worth it. So I would wait for a proper base to form and then break out for me to buy and then give me a nice risk to the world plus a a decent stop loss, not just something that is ridiculously wide. So this is for GBP USD and Euro JPY. I don't know if there's any other pair that I talked about last time. XPX, yes, XPX. I talked about XPS. The analysis was simple, but SPS went along to do other things. SPS went along to do other things. We are anticipating a pullback into here. Anticipating a pullback into support Fibonacci and trend line. Buy to the upside, but price got here, almost got to the level, and then blew all the way to the upside. But let's see how next week will go. Maybe we might still pull back or not. I don't know. I'm not the markets. So this is what we're seeing for now. So as simple as that. Simplicity is key. SPS, Euro JPY, and GBP USD. So what I tend to do is each weekend I'll look at all the pairs I have on my watch list and check which ones are giving me a nice setup so I can look forward to the pair in the coming week. Euro JPY, honestly, is confused. I am not touching this pair at the moment. There's nowhere to enter, there's nowhere to exit. I do not know what the pair is doing. So I simply leave it alone. USD JPY, nothing. USD card, nothing. GBP JPY, nothing. GBP card, nothing. AUD, nothing. NZD, all these pairs are not showing any form of nice setup, so I simply leave them alone. The only pair I'm focused on is GBP USD, GBP USD. I'll be watching this pair, seeing how it will play out next week. Euro JPY. Waiting for if you can get a pullback. That is what I'll be interested. If and only if. If none of that is seen, I will not take any trade. SPS, same thing, wait for a pullback. If you do not see that, no trade to the upside. So also BTC USD. During the last episode, if you guys can remember, I anticipated a pullback into Fibonacci support trend line. But BTC USD is quite tricky at the moment. You can see that we are getting to this trend line and it's actually holding it from reaching this area. So I'll simply not do anything because we have not, just like entering a premature trade, than entering a trade that has a full check, a full planned layout. So if you had put back into here, I'll be more comfortable entering into BTC. But we did not do that. So I will simply not enter into the trade. So this is it for clicked breakdown for this week, next week. So this video is actually fast and simple. I didn't want to take any of your time. So this is what I'm looking out for. Look out for it too if you want, and tell me what you guys think. So see you guys in the next video. Alright guys, that's it for today's section. Hope you guys found value in the video. See you guys in the next episode. Peace out. 49 more if your babes want subscribe. I had me a famous thing, goals and things, gains and things. My house party, a babe station.